Hi, it's Jacob, and today we're going to be covering indexes and investment advisors in Canada. So if you don't know what an index is, it's very simple. An index is a group of stocks that track something. So a very common index is the S&P 500. What that is it's 500 stocks that track how well the US economy is doing. Once again, that group of stocks, 500 stocks in this case, that track how well something is doing. In this case, the US economy. Another one is the NASDAQ 100. It's 100 stocks that track how well the technology sector is doing. You can invest in the S&P 500 and you can expect a return between 7 and 10% every single year. And that's highly realistic given the fact that in the last 90 years, the S&P returned about 10% annually. The reason this is so important is because it goes hand in hand with the point of having an investment advisor. So the goal of having an investment advisor is because one, you think that they can pick stocks better than you can, and two, they're able to beat the index. In this case, the S&P 500 is the index that most investment advisors are trying to beat, also known as a benchmark. But as you can see, in the last 10-year period, only 1.67% of investment advisors were actually able to beat the index after factoring in a management expense ratio. And the reason behind that is multiple reasons. The index itself is generally hard to beat, but also because Canada has one of the highest expense ratios in the world, about 2.35% on average. So let's say that an expense ratio is 2%. If your investment advisor returns 10%, and there's a 2% management expense ratio, that means that you only return 8%. When you extend that period, so over 10 years, investment advisors, they get smoked by the index. But as you go to 15, 20, 25, 30 years, it's even harder to beat that index consistently. Very, very few people can do that. So the key learning point is you don't want an investment advisor in Canada, and that's going to be true for like 98% of people, especially when you're investing 20, 30, 40, 50 years. So now there's three key learning points that you want to take away. First is that you can now define what an index is. Two, Canadian funds really struggle to beat the average benchmark, the S&P 500 index. And so part three is that if you don't know where to start, the best place to start is probably by buying the index. There's a ticker called XUS. Maybe don't do that now. The reason is because later on in this video series, you're going to find out a better way to invest in a better index. So stay tuned for that, and thanks for watching.